I would suspect that we are nearing the very end of this pullback of sorts, if you will, and would expect there to be uh, optimism as to what we could expect to see with prices moving forward, just based upon using the last 2 years as an example.
Take a look at the dynamic world of precious metals with Andrew Schectman, CEO of Miles Franklin. Learn about the determinants of gold and silver markets, as well as the impact of Federal Reserve speculation. Stay updated on the latest trends to make informed investment decisions and discover why managed money positions are going short. Let's listen to him again.
Yeah, no, I mean, at the same time, you see 5.5 million ounces delivered off of COMEX, signaling that big money understands what's coming. The lack of volume in the retail industry is, to me, shocking and eerily quiet. I'd look at it as a contrarian indicator. It's as if we got really whacked by the front end of the hurricane and we're square in the eye of it. And for whatever reason, maybe it's the fact that you got 7 stocks leading the Dow and the S&P, to all-time highs, while the breath is decreasing, but people don't look under the hood. They just think everything's okay. The stock market's roaring, and there's talk of a soft landing, and they lie to us about inflation and unemployment so that we believe that they're all under control, and people are asleep. Yet the big money who's draining COMEX and the LBMA and companies like BlackRock and 19 other executive companies getting in front of the Parliament in Canada saying it needs to be considered as a critical metal, just underscores to me this dichotomy, this disconnection between the mainstream and physical metal. And honest to God, the premiums and the availability is as good as it's been just about any time in my career, at a period of time when things might be more disjointed and concerning, at least as far as I'm concerned, at any time in my career. So very unusual time, very quiet. It's as if it's as if we're just right there in that eerily quiet before the storm. And I'm very confident, with 200 meetings leading up between now and the BRICS big meeting in October and the election in November, to believe that it will be this way for the next several months, I think is highly improbable. So I guess we'll have to see, but no, it's very, very quiet. There's lots of product and low premiums, and this is industry wide. Well, I mean, I think that when you talk about the commitment of traders reports, anytime that we've seen the managed money go short in silver, which is kind of what you're seeing, and commercials, on the other hand, are taking the other side of that, although they're not flat out long, but they are taking the other side of that. And more importantly, it's the managed money going short. Over the last 2 years, typically this is correlated with price bottoms. And so I would, trying to be optimistic and hopeful, I think that when you see managed money going short after a good period of time of prices behaving counterintuitively, at the same time we're seeing big withdrawals coming off the exchanges, I would suspect, not to mention when you talk about range bound, it's trading in a range bound. I think they call it a pennant formation, where it's a narrowing range bound, and we're getting to that point where things converge, and either they go up or they go down, and usually in a substantive fashion. But when you see the managed money going short, typically they're the ones that get fleeced. So I would simply say that I would suspect that we are nearing the very end of this pullback of sorts, if you will, and would expect there to be optimism as to what we could expect to see with prices moving forward, just based upon using the last 2 years as an example. Not really. I mean, that's more of a strata above where we are focusing our attention. But look, at some point you would assume that the managed money wakes up to the game that they've been playing over and over and over again about rinse, wash, and repeat, where they get sucked in to speculate, the prices rise, and then the commercials come in and short the rising price, and those options or those contracts end up expiring worthless, or the managed money capitulates and sells. When you have a market like, for example, in the gold market, where the registered category is nearly 500% or 5 times rehypothecated, much more in silver. And when you talk about the Basel III compliance, where these contracts have to be, in order to be on the books and counted, they need to be physically held rather than a paper derivative. Look, the market is becoming harder and harder to manipulate. And that's why I think you can only manipulate a market over an extended period of time by pushing it in the direction that it is going. I think that to short naked, in particular, a gold market in this environment globally is as dumb as a mud wall. And maybe there are traders on both sides of the equation, on both sides, whether it be the specs or the commercials, who are wising up to the risks that would be involved in being on the wrong side of this trade when it breaks. So, yeah, I think you will see less liquidity and maybe you will see some volatility. But a lot of this in the end has to do with the fact that the COMEX is setting the price, not the physical demand globally. And I would argue that the physical demand on a much higher level with the central banks in particular is really the truth about the way that the big money sees gold, and the people who are comprising the retail market, oh, they're a couple steps behind the game. They don't see the need or the reason to own physical metal, but the big money, they do. And I also think they're wising up to the fact that with the big BRICS meeting and all the 200 meetings leading up to it, with the election, with all of the change that is coming, with all the problems with the banks, with all the problems with debt, with all of the problems around us, that it is a very risky proposition to be playing in a market like this, where being naked short the wrong day can end up wiping out a company if this continues to, or if things start to get crazy and you see the world wake up to something that isn't a piece of paper. If there are companies or sovereign wealth funds or institutions or banks standing for delivery, and you have the opposite side of that who's naked short, God only knows what will happen in this environment. But you put yourself back over the last 20, 30 years when nobody wanted gold. It was easy to create this environment, this illusion, by suppressing naked short. No one was going to ever stand for delivery, but that's not the case right now. And I just think it's one of these deals where maybe, just maybe, you have people wising up to the dangers of naked speculation in this market. Yeah, it seems like a lie, just like the subprime crisis was contained. He says we've looked at the big banks. Well, 70% of all the commercial real estate loans are held by the regional banks. It's kind of interesting how he just glossed over that. And not only that, you have 70% of the small business loans. So these businesses who are involved in the real estate are also taking the loans, largely from the regional banks. And when you talk about how bad this can get, you got the Xerox building in Washington, D.C. that just sold for $25 million 2 weeks ago. But it was in 2011 that it sold for $145 million. That's an 83% loss. And how many buildings like this are going to hit the market? How many of these loans over the next 2 years, well over $1 trillion, need to be reset at rates that have gone much higher? I think he's lying about this. I think he's just trying to maintain calm. But when you talk about, the regional banking problem, yeah, $160 billion in the short-term funding program that ends March 11th. Where's that money going to come from? And when you talk about a bank like New York Community Bank, 40% of its assets are uninsured. Over 40% of its assets are uninsured. And so that means if you look at, there's $7 trillion in uninsured deposits in the banking system. And it's not just New York Community Bank, which, by the way, was one of the big banks involved in taking over, I believe it was Signature Bank. So they bought one of the distressed banks themselves, or took a large portion of it. But a bank like New York Community Bank also owns other smaller banks. Here in Florida, there is a branch, and let me tell you the name of the branch. Let me just look here real quick. But they closed also. That branch is called Amherst. And the Amherst banks, which is I guess it's an offshoot of the New York Community Bank, all of the Amherst banks have a sign on the door that says all branches will be closed beginning February 16th at 6 p.m. Eastern. We will reopen Tuesday, February 20th as Flagstar Bank. So yes, they are still consolidating. There'll be a lot of consolidating, but one of these moments, at one of these times that you see one of these banks fail, you're not going to have another bank come in and step in and take over the distressed assets, and you will see a bank be bailed in. I think the banking problem is far from over, and the money that's been injected into the system, the $160 billion, is proof of that. We're a long ways away from being out of the woods with the regional banking crisis, but to what he said, we're working with the bigger banks, they're fine. Well, that's great. It's 70% of the commercial real estate loans are held by the regional banks. And that's where the problems will be. This is where the consolidation comes in. And I guess we'll have to see. But I would say, just as Bernanke was full of crap, so too is Powell as it pertains to his projections on commercial real estate.
As we conclude this insightful discussion, we encourage you to stay informed and proactive in your approach to the gold and silver markets. With Andy Schectman's expertise from Miles Franklin, you can trust that you're receiving top-notch analysis and actionable insights to guide your investment decisions. Keep a close eye on market developments and subscribe now to ensure you never miss out on the latest updates and trends shaping the precious metals arena. Thank you for joining us, and until next time, happy investing.